welcome to another episode of JYR Trades. Today is Tuesday, April 7th, and I gotta tell you what a day it was today. I can't wait to share with you all what I experienced today. It was a great day of learning, but also a great day of testing my skills that I've been developing over the course of several months now. Alright, with that said, guys, welcome back again to JYR Trades. Remember that everything I share on this channel is pure educational. Alright, it's for educational purposes. It's not financial advice. However, if you want to learn to trade market structure, auction theory, equilibriums, liquidity, the way institutions trade, the way the big players trade, then you're in the right place. Alright, with that said, let's go ahead and get started, guys. Let's talk about, first of all, how did market open? Alright, that's the first thing we're going to talk about. First things first, market was right here. This is around 7:29 a.m. in the morning, Mountain Time. And I'm looking at this, and the first thing I'm going to ask myself, are we inside or outside New York value? So this white line right here represents New York value area high. This other white line represents New York value area low here. Alright, so automatically when I look at this, I'm thinking to myself, we are outside and below New York value. Now the next question becomes this: where are my mids? Okay, we have one mid right here again, pushing outside, leaking below New York value. And then of course the London mid, I'm trying to figure out where it is here. Actually, it's right here in the same spot. That one's also leaking. And then we have one of the mids here. This is our our POC. Our London POC is also leaking. Okay. And then of course we have our two other POCs are right over here. You see one here and one here. Of course, one is going to be inside New York value because it's inside New York value. It's New York's POC. The other one, which is Asia, it was right here. So this one was again kind of leaning south. All right. In other words, it's closer to value area low than it is to high. So right off the bat, guys, this was telling us that we were in a continuation down. Okay. Now, I'm going to be honest with you, I was a little bit hesitant about overall today what it was going to do because, well, a couple of things, some of the news that's been going on, the geopolitical news going around the world, but then also this particular POC. If this POC had been a little closer to the downside, I would have felt a little more comfortable. But overall, guys, it was definitely a what do you call, a continuation bearish. Right now, when market opened, I knew right off the bat, because of our auction zero was here and price was here, I'm like, it's not going to migrate very much. Okay, in fact, when it did migrate, it only migrated about this much. Okay, you see that right there at 62.50. Okay, so 62 points more or less, right? Which is really not much. That means price was not overstretched. Okay, so the chances of continuation to the downside were definitely going to be high. All right, so I gotta tell you something that I did today. Okay, I actually challenged myself, because one of the things that I've discovered when I'm doing a trade, or when I wake up in the mornings and I realize that we are opening outside value, okay, we're not in rotation modes. In other words, price is not opening inside New York value, then I say to myself, okay, we're outside value. Is everything else pointing in the direction that we're supposed to be going? In other words, are our mids leaning or leaking south, and our POCs, most importantly, are they also leaning and leaking south? In this case, they were. Okay, and so I knew right off the bat that we were going to be in a continuation side. And if you've been following me, okay, for a while now, this is the way the market works. Okay, particularly when we're opening outside New York Valley. So if today we were on a bearish, okay, continuation, that means that we were going to go to the downside. Usually New York is going to do one of two things when it opens up. One, it's going to give us a fake move to the downside, and then a fail move to the upside, and then the move is going to begin. Now within the move, when it begins, it eventually has to do a reclaim, and then from there on the real move actually begins. Now I said to myself this morning, I've been getting better at this, I've been understanding this, okay? I had my fib ready. In fact, my fib, I had it right here, okay? My zero, I had it right here, right where New York opened. And if you noticed, again, migration didn't move a lot. Once some post-migration happened, my fibs and my zero and the post-migration were almost on par, so I really didn't move it. So first things first, I had my fib there, I saw the post-migration, and literally I said, I'm going to try to challenge myself today. Not, guys, I don't recommend this, okay? But I said I'm going to challenge myself to see if I can trade all three moves today. The fake move, the fail, and then the main move, okay? Now I'm going to be honest with you, I was a little nervous, I was a little uncomfortable, but I said I'm going to try it. I'm going to see if I can nail it. And sure enough, guys, so once I saw that price was starting to come to the downside, okay, I saw movements around between 0 and 12, I decided to take a short. I targeted the 25. That's what I targeted, okay? All right, and as soon as that happened, I waited for price to kind of give a little bit push to the upside. Once it started coming back up to the negative 12, I targeted right above the 0, and boom, I got it. So right there, right off the bat, those were two trades, and I said, okay, let's wait for the main move. Now within the main move, I'm gonna be honest with you, I was already like kind of excited at, and kind of nervous at the same time, because I'm like, this is the first time I'm doing this, okay? And so once price started coming down and I saw, really, I think it was this rejection right here, I decided to go in. And at first I was like, whoa, I saw this right here. And honestly, guys, the rejection that I should have gone for should have been this one here, okay? And the reason why I say this is because, okay, in the past I have told you that when it opens outside of value, it doesn't need a full body interaction here back to auction 0. Sometimes it may just tag it. Today it wasn't even a tag to the auction 0, it was a tag to the Remitar program that I have here. Now you can see here, I'm gonna remove some of these here, some of these lines, so you can see, because I got different versions of Remitar that I work on. And I'm gonna remove my 2.2. Okay, no, actually that's the one I want to keep. I'm gonna remove this one here. Yeah, that one there. And I'm gonna remove this one here. Okay. And the reason why I want to remove it, guys, is because I want to show you that, okay, so you'll see right here, this is the Remitar 2.2 version that I have here, and this is this cloud shape right here. This is really the no trade zone, okay? You'll see right here that price rejected off of it here. We have the auction 0 right below it. And this other red line is really the point where that's where you can say it's the safe entry. And once we had a rejection here, price started moving, okay? Now initially when I went in, like I said, I think I went in right here. I saw this, I was like, oh, did I go in too early? No, not really. As soon as well, yeah, a little bit. As soon as I started on the next candle, started coming back down. And I'm gonna be honest with you, I was targeting the 62, but I was so excited that I was going 3 for 3 that I decided to cut it short right before the 50, okay? And boy, did I realize that this was one of those days where price would have continued going, because, and I'm gonna put my Remitar 2.0, okay? You see here my three bands of Remitar right here, these three larger bands here. Once price hits this middle band here, you see the rejection, price started coming back down, and it went down to the negative 1.5. Once again, and we hit the rejection here, starts coming back down. Okay, and what does it do, guys? All the way to the negative 2. Wow. Now, as I'm seeing the day, I'm realizing, remember Remitar 2.0, these bands get flat for New York PM. Well, today, guys, because price moved to the negative 2 fairly quickly. By 9 o'clock, I mean 9:06 in the morning, an hour and a half after market open, it did the full cycle here. I mean, at least up to the downside. And what did it do? Started coming back up. And I realized here at this point, I'm like, whoa, this wasn't just a liquidity graph. This was actually price doing a full reversal cycle. And it decided to go, through my Remitar bands right here, my 2.0. And what does it do? When it goes all the way to auction zero. This itself was a reversal move. Okay, and that is definitely something that I'm keeping my eye on for my programs, because I want to be able to catch these type of moves. Okay, and then what happened, guys? Well, throughout the day after that, you can see that between the white band on Remitar and the auction zero, it was going back and forth. At one point, it decides to come back right past it into our Remitar 2.1 here, and price decides to come back down once again to the white band over here, and once again, what does it do, guys? Comes back into repair, into value, and passes value all the way to our previous day high. What a day, what a day. Okay, and like I said, once I had my 3 trades here, I was done for the day. I'm like, I'm done. And I kid you not, I saw this opportunity here, and I was like, I think this is one that's going to go, at least I would have targeted the 87 or perhaps the negative 1. And then once I saw this opportunity once again right here, I'm like, okay. But I'll tell you, the reversal move, okay, because right here we see price again go down to almost to the negative 1.75, goes past our red band, hits our white one, comes back down through it, and to me this was the reversal move right here, because once it crossed this red band on a Remitar program, it was letting me know this move was real. Okay, but I will say this, okay, is that when I look at this, the way I traded today, those 3 trades, I wanted to prove to myself that I could, and I did it. Okay, but to be honest with you, that's a scalper. That's what we call a scalp. Just get in and get out. I'm trading to be more like a sniper. And what I mean by that, I want to enter at the best possible entry and try to write it out as much as possible. And really, guys, there's one of 2 ways that I could have looked at this today. One would have been right when this got tagged here. Alright, this would have been the move. Because honestly, guys, at this point, we are outside. Okay. Outside of negative 12. We're outside of the Remitar right here on both of these here. And at this point, I mean, it just kept going down. The other entry that could have been actually a more safer one here would have been this one here. Once it tagged and came back up here, this rejection, that would have been the move right there as well. Okay, and so that's really the key lesson that I want you guys to learn today, is that yes, we scalped. We did 3 scalps, but honestly, this one move right here would have paid more, way more. And I mean, this move itself would have been a straight down to the bottom. Okay, so again, guys, price opened outside below New York value. POCs, one London POC was already leaking south. That means it was outside of value. The other one was leaning closer to New York value area low already. Our Our mids were also outside and below New York values. So everything about today was telling us that it was going to be a continuation, but not only was it a continuation, but it was a full cycle because it reversed. Okay, and it actually, as you can see, went way past it. Okay, as you can see. So today was a day where if you're timing it just right, um, and you learn your system, your edge, and you're gonna continue to get better. I'm beginning to see these moves better each day. Each day. Remember that when I post these videos, look at the pinned comment that I put, because that comment's gonna have the journal of the day, and also it's gonna have a picture where I'm gonna show pre-New York and post-New York. So that means that we're going to have uh, a connection that's going to show us a visual of the actual day. So that's to help us remember, at least to help me remember, that I can recognize this type of day the next time. And it's already happening. It's already happening. I'm already seeing it. I'm already understanding the difference between rotational trap days. We have days where they're true rotational days, and then there are days that it's going to have a rotation and a trap, and then it's going to expand. And then we have our typical continuation trend days like today. Today was a trend day, but then it also reversed too at one point. So you start to see the different personalities of the market. You start to see just how they change and they morph throughout the day. And that's the part of trading, the trading journey, that we have to learn to recognize them in real time, and of course act upon them. All right, well, this concludes today's episode. As always, guys, everything that I post here is educational content. It's not financial advice. But if you have enjoyed this episode and you learned something and you want to join me on my journey, please hit that subscribe button, share, like, and comments. Till next time.